Hey traders, what's up? Jamie Saettele here. It is February 9th, 2022, and welcome to the FX Power Hour with me, Jamie Saettele, with SB Trade Desk and Scandinavian Capital Markets. All right, so we will jump right into US dollar. Pretty quiet week here so far. Post, ECB last week, right, which was pretty much this dollar drop. We did have NFP last week, but really since ECB, it's been pretty much sideways, right? So the big level to pay attention to in US dollar, which if you do follow, which I do recommend following it, it is a good representation of the buck in general. USDOLLAR is going to be the trend line down here at about 12.1. Let's call it 12.140. So really, until we crack that, it's kind of no man's land, right? DXY continues to just look like the biggest top, right? We keep nailing resistance, nailing resistance, nailing resistance. This thing looks like it just wants to fall apart. Again, that's why I'm kind of tracking that US dollar chart so closely. But here we have some more evidence that the buck has indeed put in some sort of a massive top. Okay, so this is from my post from 2 days ago, and this is UUP, and this actually is a follow-up. It's a good time to follow up on. We had a question after last week's webinar. Question was, can you tell us what the graphics and what platform you were using? Is it ETF volume itself? Where can we see these graphs by ourselves? What is UUP? So that is this chart. The graphics here, this is software called TradeStation, and this is ETF volume. The indicators that are coded in here are things that I've come up with, so you're not going to be able to see that. I am working on, I'm going to get this programmed into TradingView so people can subscribe to it at some point. But I need to learn how to code in Pine Editor myself before I do that. So I don't really feel like paying anyone to code it for me. So I will, let you know whenever that's done. Anyway, yeah, this is UUP, which is the dollar ETF, right? And this is the weekly chart. So I think we probably looked at it last week on a Thursday, and I was noting that we were probably going to get this weekly volume reversal because we looked at it on a Thursday, and by that point it actually already happened. So this is the final result, right? So we did get that big volume reversal. This is what do you call a 2-week volume reversal, or 2-bar volume reversal. In this case, it is a weekly chart, and this is all of the reversals really since inception of that ETF, right? Which obviously does not go back all that far, just to late 2007. And yeah, we have, sell signal, sell signal, sell signal, sell signal. This one would have not worked at all. This one would have been pretty good for a couple of weeks, right? And then the buy signals you can see here. So point being is that most of these signals have been really, really timely. Maybe not immediately, right? Maybe, in the case, like a lot of these tops, we trended sideways or built a base or something, or a top formation before moving that direction. But when you combine this with, this DXY chart, right, the trend line here, the US dollar chart, again, which is right here. And this is why, it's important to kind of follow this chart here, because this is like the trigger for a bigger move to the downside, right? Until then, we could really go sideways and do, kind of whatever, frankly, be really boring market after this reversal off the top. So yeah, just pay attention to that level right there. Okay. All right. So that is what I've got to say on US dollar and the buck in general. Let's head up to euro. So Euro, again, this is, I think, the exact same chart we looked at last week because, frankly, we, again, did this on Thursday. Nothing has happened since Thursday, right? Big move up and kind of flagging here, right? I am bullish. I do think that 113.50 to 113.80, this little highlighted zone here, is going to be and is proposed support and will provide support. At least that's what my working assumption is. I would also pay attention to the top side of this trend line. And you're looking up towards, say, 1660, which, again, 200-day average, low back here. So, yeah, right? Reward to risk upside. But if you're trying to be real fine about it, you might not have support until 1350 to 1380. That's, just a possibility there. Cable, and so this is actually, this is a good kind of thing about strategy, right? So if I'm sitting here and we're currently trading 1430, right? And you're like, well, 1350, 1380 is what I'm saying could be support, right? So, that's like 80 pips to the downside from the bottom to the bottom of that zone. That does not mean that I want anything to do with the short side here on Euro at the moment, right? I'm going to trade with what I think is the bigger move, which, again, I think is higher, right? This is a beauty. However, that doesn't mean that there's not opportunities, excuse me, to maybe buy or be long the dollar for a short amount of time somewhere else. This is British pound, pound dollar, right? And what we've got here is this is actually had a chart in last night's update. I'll show you last night's update. Here's last night's update. Okay, so we had, here's the cable chart. So this is what we were thinking last night, A, right? Okay, B. So it looks like we've put in that little B wave high up at this nice 38.90 spot. So my thinking here, as you can see from the labels on the chart, is kind of looking towards 2 equal legs down. Also, the 618 of the rally from the low back here, late Jan, is 34.60. So 34.50, 34.60 is a decent spot. 35.60 here, resistance. We're short from that level. Very tight stop above here. Again, just, this is a simple setup, and it's based primarily on the fact that you've got a 5-wave drop here in cable from that high last week to the low last week, okay? So yeah, that's about it on British pounds. But yeah, so looking down towards 34.50, 60, and then maybe actually, if you got a decent enough reaction down there, you could actually have a stab at the long side. But cable sometimes offers some really clean levels and patterns. And this right now is one of those times. All right. Let's take a look at, let's actually go to some commodity currencies first. Let's go to Aussie. Okay, so recall that on Aussie dollar, okay, we had, and this is futures, right? This chart. And this is from, I guess, 2 or so weeks ago. Yeah, 2 weeks ago, the day of the low, the 28th. And we had a huge daily two-day reversal, right? With volume. Again, this is going back to, 2016 or so, and you can see that we have had some pretty solid signals in terms of these reversals, right? Looking at it just from a very simple standpoint, it's a big damn level. I mean, this is the November 2020 low. This is the Biden election here, right? We tagged that in December. We came back and failed, reversed back again in January, late January. So you've got all kinds of potential here for kind of, you know, whatever you want to call it, double bottom, blah, 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 blah. What I like too, and this is just going to be a very simple setup here. So I'm going to put up 2020 this is 2022 volume weighted average price. So this is the volume weighted average price for the entire year. And you can see we've just broken above it. Frankly, it's not that far below where we are now. It was recently resistance, right, very early in February last week, and we just broke through that level. So I'm kind of paying attention to this level, like 7150s for support now. Okay, so keep that in mind for Aussie. Kiwi. Pretty sure we showed this trend line last week. Trend line back from the 2017, 2018 highs, right? Nailed that. 2 equal legs down. Again, we would call this in Elliott a complex correction, right? Because you've got 3 waves down, 3 waves up, 3 waves down. So every leg is corrective or a 3. So call it a double 3. Call it whatever you want. Bottom line is you do have 2 legs down from that high, basically a year ago, February of 2021. So we've responded to the level. I do like it higher. As I speak right now, we are coming into, you know, natural resistance from former lows, former support here in December. The Aussie setup is a bit cleaner to me. That doesn't mean it's right, but that's cleaner to me. A level to keep in mind if we do pull back a little bit from this overhead spot is, where is that volume level right there? So that volume level on spot is going to be 66.62. Okay, it's like 30 pips lower than where we are right now. Okay, continuing with our commodity FX, let's take a look at dollar CAD. We are short here a little bit. And yeah, we had a little reversal, right, last week from well-defined 2760s. We have longer-term resistance as well after trading up again throughout last year into the 2950 area, which if I scroll back, you can see was that low from 2019. So it's just a key level. If I bring up, let me bring up a different chart here so you can see it, but hold on here. So this is kind of why I like the short side, really. It's that simple. That low there, and then you can see here, right, the reactions that you had right there, right? Support, resistance, good night, resistance, resistance again, right? So yeah, I do like, you know, dollar CAD lower on a very near term basis. Kind of pay attention to this 25, you know, 20, 25, 30 area, which is just the trend line from the June 2021 low, right? That was support back here in late January. We ripped off of it, and we are now probably going back towards it. At least that's what I'm thinking. If we break that, that's the signal for a much bigger drop, right? Especially coming off that long-term, well-defined horizontal resistance level. Okay, dollar yen. I'm not going to spend much time here because I don't have a whole lot to say about it at this point. I continue to kind of focus on the channel from this March 2020 low, and you can see the upper parallel, which I have in red, right? That was resistance, false break back into it, false break back into it, and then over the last 3 weeks, we've really been pressing into that level. It's also 618 of the entire decline from 2015 to 2016. Okay, that's a big level, 1550. So again, this is going to sound like an economist here or something, but like you've got either what is kind of a very slow developing top, right, or we're coiling like in some sort of a triangle formation like we did back here for another run to the upside. And I don't have a very strong opinion one way or the other at this point on what dollar yen is doing or what the option is, right? So until I do, I'm probably not going to be talking a whole lot about dollar yen, but that could happen very quickly, right? We could change, you get a new information over the next couple of days and that could change. So we shall see. Okay. All right. Before we get into commodity stuff and some indices and some crypto, it is a good time for the announcement that we are looking for profitable traders at Scandinavian capital markets. Over the last couple of months, we have launched a new version of our prop trading program. So if you are a serious trader, right, you should check this out. You can get funded with up to $1 million. Okay, of course you have to pass our assessment, but there are no monthly fees or time constraints. They're just trade and get funded. It's that simple. So if you would like to go from just individual trader to money manager, go check it out. Go to scandinavianmarkets.com/get-funded. Okay, again, scandinavianmarkets.com/get-funded. All right. Okay, so I said we were going to look at some commodities and some indices. Let's spend some time on gold here. All right, so here's a shorter term chart of gold, 4-hour chart. Bullish fork back to January and trading very firm within this, right? Each dip really has been supported along the center line. And since breaking it, the only dip you've really had has been the one from, this was yesterday, okay? We are now pressing firmly against a major level here. This is the horizontal level called 1830, which was resistance, very early in the year, and support in late January. You get through here, things get really interesting, and I want to go and look at a bigger picture chart. This was actually in last night's update. Okay, so we're going to scroll out. We're going back to the 2015 low here. Okay, this is log scale, but all we've got here is a simple channel. Okay, trend line, parallel, center line, what have you. This is textbook when it comes to median line analysis in trading. So first of all, let's just go back, right? Okay, so you had the channel, draw the channel. Big rally. Where did we stop first? We stopped here at the center line, okay? In fact, we stopped at the center line, pulled back to the midpoint or the 25 line. And then once we broke back to, this was what we call median line acceleration, right? I mean, it's just perfect. And it's not a coincidence, by the way, that you get these textbook examples like this with gold. Gold trades technically just beautifully. And there's a reason for that. There really are no fundamentals when it comes to gold, right? Gold does not have an interest rate. It is pure supply demand. So it is pure, study of human behavior, of, which is on the chart. That's the whole point of technical analysis, right? So, okay, so we got that. Then we stopped back at the upper parallel, okay? Now it got pretty damn sloppy over here. This is March 2020, right? After the initial deflationary markets reaction subsided, we ripped higher, and guess where we went to? I talk about this a lot in my writing and in my webinars. We went to the full extension, okay, of the channel. So take this distance, extend it, and that's where we went to, like literally to the tick. And since then, we've pulled back and found support more or less on the top side of the former, upper parallel, or of the upper parallel, which is formerly resistance, now support. That is really bullish, okay? It's very, very bullish. In the context of all of that and what I just said, from that top back in August of 2020, we have developed or formed a tight coil, okay? You can call it a triangle if you wish. Point is, we've been in a contracting range since that point. And there, think of kind of physics, if you will. You've got a lot of potential energy, or spring energy in this case. And if we get through this line, it becomes kinetic energy, and we're off to the races, in my opinion. That would be the signal. So again, here's that trend line. This is back to January 2021. So year plus trend line, 13 months at this point. Very well defined. 1, 2, 3, 4 touch points. If you get through it, go with it. So yeah, gold is ready. It's primed. Does that mean it's going to happen? No, but I would certainly pay close attention to this. I would look at it every morning and or evening, and get ready for that. Just mentally prepare yourself for a breakout. Okay, so that's my piece on gold. Silver, obviously lagging far behind silver, or is lagging far behind gold, I should say, which is interesting because interesting/odd. Typically, during big inflationary booms, you see things like silver outperform gold, or silver has outperformed gold during previous inflationary. But that's not to say that won't happen, but gold is knocking on the door and silver is not really doing a whole lot. So I don't know, if I'm looking at this from a very short-term perspective here, I don't know, maybe this is a 5-wave move up. Maybe you pull back, find support. Frankly, I think it's a waste of time right now. I would just focus on that gold chart because that's just a powerful look, frankly. All right. Let's look at quick look at some indices. Okay, so I just put this on Twitter, actually, this chart. This is the Dow Industrials. I know it's not nearly as followed, say, as the S&P, but you get a lot of great information from this chart. Just look what happened at the low, right? We were actually looking for support at that center line here, which actually goes back to the 2009 low, believe it or not. And we missed it by, less than 100 Dow points. In fact, this is just the daytime prices, so regular trading hour prices. So it probably actually would have hit it, or did hit it overnight anyway. But yeah, so, we are coming up to a level that I think is worth paying attention to, and that's the gap or the uncovered close, right, from January 14th, and that's 35,905. So pay attention to that. Again, this is not like a prediction or something. I had a question here from someone saying, what's your view at that level? I can't tell you my view at that level. I'm just saying pay attention to it. If you get up to it and you put in, a reversal or something, I'm saying at this point it's a possible resistance level because it's just a gap. All right, those big gaps like that tend to, engender some sort of reaction. So just pay attention. But if you pull off of it, maybe there's something there. This is a very clean looking channel. All right. And that's obviously been support. So until you break that, or unless you break that, it's probably fighting, pushing a balloon underwater to try to be on the other side. But that's the biggest thing I'm paying attention to in indices at this time. Okay. All right. How about some crypto? Okay, Ethereum. Here's a 4-hour chart. Trend line has been hit. This was in last night's post, and we also have. This is actually what's this thing drawn off the bottom is not a channel. It's actually a shift fork. So. Support in Ethereum. Okay. Bitcoin. Remember our simple pitchfork here on Bitcoin, and we nailed it, nailed the low. So at this point, only levels really to be aware of for I mean, yesterday's high was on a pretty good spot. Maybe a tad higher. Gariel says, do I think gold will break up or down? Well, I don't think about it. I'm just saying if we do break out to the upside, then go with it, right? You don't want to like predict necessarily, right? The market right now, gold is trading right at or right under a massive barrier, and if you break through the barrier, then go with the break, right? Until then, hurry up and wait. It's kind of the best way to think about it. Okay. All right. So. All right. So I'll look out like this way for Bitcoin anyway. 46.85 is a spot. But other than that, I mean, maybe we go back to this upper parallel at some point. I'm not really sure. We did identify the big low back here. You're probably going to want to pay attention to the trend line here off of this low. If you ever get down into it, I would watch for support from that. So that's about all I've got in terms of the crypto stuff. That's obviously a very big spot down here, right? 2 big lows. So if you got a sharp pullback over the next week or so, or 3 or 4 days, that would be support, okay? Or that would be proposed support, I should add. I forgot to show this. This is a euro pound. This is a cross that we really haven't looked at a whole lot, and very clean range here. And this is a weekly chart. A lot of people think about ranges like on shorter term time scales. Ranges occur on longer term time scales as well, especially in FX. And this is going back to 2016. Okay, I'd I'd say that level where that red line is pretty good resistance, and I'd say that blue line is pretty good support, and in fact it's precise, right? So we just reversed higher from that. We put in a really big weekly reversal bar here, okay? On a daily chart, I've got it mapped out here with this fork, but you'd be looking right here at about 85 and change. That has been resistance several times, okay, over the last, say, 4 or 5 months. If you get through that, then, you know, next spot is probably 87.25, which is kind of the center of this well-defined long-term range, right? Okie doke. All right, so that is all I've got for today's market analysis. So again, pretty quiet week. Excuse me, pretty quiet week following last week's fireworks with ECB, but surely probably going to get some more volatility over the next couple of days. We do have inflation data out of the US and I think out of the UK as well. So with that being said, pay attention to the pound dollar chart. And, you know, we're thinking C wave lower and then maybe higher after that. I continue to really focus. The two things I'm really focusing on are that euro chart for 1350.80 support, and then the gold chart, which, you know, is threatening or trading just under that huge barrier. So there's a possible breakout move there that could take place any moment, really. So again, Jamie Saettele here with Scandinavian Capital Markets and SB Trade Desk. Be sure to follow me on Twitter at Jamie Saettele, and you get more information about all my work. All right, that's it. Again, take care. Be safe. Good luck. Bye.